Welcome back to Columbus Brick by Brick, where we uncover the people, projects, and ideas shaping Columbus one conversation at a time. I'm your host, John Steyer, broker and owner of Steyer Hospitality Co., the premier management company for furnished short and midterm rentals here in Columbus, helping investors maximize cash flow while serving guests across our city. Today, we're talking about one of the most powerful tools in an investor's toolbox, capital. I'm joined by Alex Rose, Managing Director of DSCR Lending at Renovo Financial, right here in Columbus. Alex works at the intersection of capital markets and real estate entrepreneurs, helping investors scale using asset-based financing strategies that go beyond traditional lending. We're diving into what DSCR lending really is, what separates investors who grow from those who stall, what's happening in Columbus rental market, and how to build a 10-property portfolio in today's environment. Alex, welcome to Columbus Brick by Brick. Well, Alex, thanks so much for being on the podcast. I'm really excited to get to know you a little bit better and learn more about what you do and how you do it. So for the listeners and the followers who haven't had a chance to get to know you in the past, I'd love to hear about who you are and how you got here today.
Yeah, for sure. So first, thanks for having me.
Glad to be here.
Yeah, so I'm here with Renovo. I started doing this investment lending back in 2021, so during COVID. Prior to that, I was doing like account management, med sales with Cardinal Health. As you know, COVID hit. Our product line was like PPE products, so super stressful. And family's always kind of been in the real estate business. Uncle's pretty big investor here in Columbus, and just kind of slowly started getting into it. Like, got my license, but wasn't really sure if that's what I wanted to do. He was business partners with Brooks Humphreys, who's also a large investor here in Columbus, and Brooks just started at another company, and Nick Eiffel, who's an investor here in Columbus, started that. And so Nick was kind of doing the investment lending stuff and things like that. Well, Nick decided he wanted to focus more on just his investments. So they were looking for somebody else to kind of take his spot. So Brooks and then met with me. I met with Nick a couple times. I remember sitting down with Nick actually and him telling me, like, when I started in 21, don't be surprised if like you don't do more than like $2 million a month. It's really hard to do this, and we're slowly growing it.
Yeah.
So I was like, okay, like, we'll try it. What's the worst that happens, right? We just go back to Cardinal. We do med sales. Like, we'll find something. So long story short, tried it. Slowly took off. We started doing 10 deals a month, and we thought that was great. And then we're like, hey, how do we get to 20? And then we get to 20, and we're like, all right, well, we've passed $2 million. So, like, how do we get to the next one? Right. And as we kind of continued to grow it, we realized that there's so many investors out there that need financing in Columbus. And it's just kind of snowballed. Your months of doing 20 loans and $2 million turned into doing 40, 50 with 10, 15 million. And as you get out there, there's plenty of data out there. As you kind of grow and things like that, it kind of led me to where I'm at now with Renovo. So I started talking to Renovo actually back in like 23, 24, and then finally working through some non-compete things and things like that, I decided to take the jump to Renovo.
So when you got into lending for real estate, you jumped right in to working with investors.
We jumped right into working with investors, yeah.
And you never had a thought towards working with retail owner occupants or anything like that?
I never had a thought. To be honest, I didn't really know much about lending.
Yeah.
I just...
You kind of fell in your lap.
Yeah. I tell people all the time, like, I'm super humbled and just lucky to be at the right place, right time.
There's something to say about luck.
Yeah. Yeah. No, there is. It's been very, very fruitful for me and my family. And it's definitely something that, as you see Columbus grow, we probably need to hire more people in Columbus.
Yeah.
I mean, that's how strong the investor market here is.
So tell me a little bit about Renovo. What is the unique value proposition, or why would someone say, okay, I want to work with Renovo, and what drew you to that organization?
Yeah. I mean, Kevin, who is our CEO, and Daniel, he's our chief lending officer. They're co-founders. You could tell immediately from talking to them, like, this is kind of a place I want to be. They're very big on culture, and things like that, and that kind of stuck out. But then you also know, as that market gets hotter, more and more competition comes in.
Yeah.
And where they're kind of leading is, as that competition comes in, you kind of need full product lines. So as we get the full product lines, you also need to be competitive. Yes, you can grow the relationships and have all those things, but like where I was falling short before was I had a lot of borrowers, right? Would do a lot of deals and get them up to maybe 10 deals. And then they would leave and go to another company for better financing terms. So finally I was like, I have this giant book of business, but it's a constant rat wheel. New investors to find the next up and coming one to watch them leave. So for me, it was like, this makes sense. Finally have the book to let it grow, and where those experienced investors, it's kind of missing in the market. There was nobody in Columbus that had the products to bridge the gap from A to B.
Can you talk to me about what those products are? What are some products that you guys are seeing a lot of success with your investors that maybe is unique or interesting, or might be interesting to someone who hasn't heard about it?
Yeah, so fix and flip loans, so bridge loans to DSCR. So like, there's, believe it or not many lenders that do the A to B really well.
And so is that one product, or is that?
That's two separate. But yeah, so that's two separate. So you can either do a hard money or a DSCR one. And then we also do multifamily. So we can do fix and flip on the multi side, plus long-term 30-year multi-debt, which is pretty unique.
How many units?
So as of today, we can go up to 20. That is going to continue to improve. We actually just brought it back down. We were going up to 100, 150 units. We kind of scaled it back down towards 20.
Is that a DSCR product?
So on the multi, we go off net cash flow.
Okay.
So we take more expenses into consideration. So like property management, things like that.
So can you explain that a little further for someone who maybe is interested in getting into small commercial multifamily?
Yeah.
What that might look like for them? Say let's do an example of a property. Let's say it's a 10 unit.
Yeah.
And it's already stabilized.
Yeah. Yeah. So you really got to look at, everybody always just looks at the rents and the tax, and they're like, it's great. It cash flows, right? I'm like, yeah, well, what about the trash, the water, the electric, the vacancies, the turnovers, all of those things, the holding costs, like all of those things play a role into your net cash flow. So a lot of people don't realize that like you need that. And even like once you get a book of single families, where you see a lot of people struggle is they just went for the 1.0 PIDIA, DSCR.
Yeah.
Where they can get in trouble is
expenses come up.
Expenses come up.
Yeah.
So they took all that cash-free money or tax-free money and just like, hey, I cash out 75.
Right.
But
woohoo, let's go to
right,
Disneyland.
Now they bought it. They bought another rental or put it wherever. And that's where you see.
And that can snowball.
It snowballs very quick.
Yeah.
Because everything always comes in threes, right?
Right.
So like 2 sewer lines go. And then you get a tenant that completely trashes it, and it's a full renovation again.
Right. And there's another 10, 15 grand.
Right. So like even at a bigger scale, you should always be paying attention to the net cash flow. And a lot of people don't do that, and that's where you struggle.
Yeah. So let's walk it back a little bit to give a little bit of color to that conversation.
Yeah.
When you're talking about explain a DSCR to someone who maybe has never heard of a DSCR. And then I want to relate it to the multifamily that you just brought up.
Yeah, so DSCR, so that's based on rent, insurance, taxes. That's it for a PIDIA. That's all you look at when you underwrite it. You can go down to a 1.0. So what that means is your monthly payment's $1,000, rent has to be $1,000 with taxes and insurance.
Just for your mortgage, your insurance, your taxes, your principal, and your interest.
Yep, when it's escrowed, it has to be $1,000.
Yep.
To get the best rate and where people should really be trying to put the DSCR is a 1.2. So rent's $1,000 or $1,200, right? Like your monthly payment, you want $1,000.
And that change is more agreeable to you as a lender because there's some wiggle room in there for expenses that come up.
Right.
And
you think about it, it's really not that much, right? In the course of a year.
Right.
Like $2,000, it won't even fix a sewer line.
Right. Hopefully you're not fixing a sewer line every year.
Right. But as those expenses come up, it's still not a ton.
So then we say, okay, so that's a DSCR loan, but when we're talking about the small commercial multifamily, you're looking at more expenses, you're underwriting more thoroughly.
Yeah.
So how do you, if it's not a DSCR product and you're not looking at just a ratio, how do you qualify a multifamily property?
Yeah, so I typically, I'll take the owner's expenses when they provide them. A good rule of thumb that like I've seen coming back on commercial reports is I always try to underwrite it at a 45% expense ratio.
Okay.
45 I feel pretty good. You know, I've seen some come in at 28 and I've also seen some come in at 52. So for the most part, like I know 75% of the time it'll work if I'm at 45%.
And for someone who doesn't know what an expense ratio is, that just means
it's basically just all your expenses added up
as a percentage of
your NOI.
Income.
Yep.
Yeah. The net operating income. Okay. So you're looking at a property, you're saying, okay, I want to see 55% of this net operating income being able to cover my debt service.
Yeah.
And if it does that, then you think it's a good deal.
Yeah, it's a good deal.
Okay.
It's a good deal. And 45% is probably a little aggressive.
A little aggressive.
Yeah. You could probably be at like a 35, 40. It depends who's managing the property, right?
Yeah.
Like what your management expenses, repairs, things like that for the borrowers. But yeah.
I mean, that is an interesting. So what would terms on a product like that look like?
Yeah, so I tell people, you know, it's so dependent on credit. Like 760 credit, I mean, we're probably at like a 7.4 on a multifamily, 7.5. It really comes down to like what we don't hold is deposits. And what that means is like most community banks and things like that make you hold a deposit.
Yep. Basically, so for someone that's not listening or hasn't done a commercial deal before, if you go to a small commercial bank, they're going to say, yeah, we'll loan to you on this property.
We'll give you 75% cash out,
right?
But you're going to keep $200 in the bank.
Right, exactly. And that's how they make money.
It's basically making the margin in the interest rate, right? That they're collecting interest from their bank account.
Yes.
So like people will get sticker shocked about the 7.4 and they're like, I can go to a community bank at 6.75. Like, yeah, I don't disagree with you. There's multiple strategies, right? How many multis do you have? How many do you plan on buying? And can that money get more cash on cash return than what you have sitting at the bank?
For sure.
So there's multiple questions that go into that, right?
Yeah.
And if some of them are like, hey, I bought a multi and I'm good now, which then you should take it to community bank. Where we do well, right, is when they want to scale and they don't want to take a $1, $2, maybe even a $3 million loan. to Fannie or Freddie or somebody like that, that's kind of where we come in.
Mm-hmm.
So like the 20 and under is a really good product here in Columbus.
Yeah.
Once you start to get into that, probably 20 plus, like it probably makes sense for you to Fannie Freddie.
Mm-hmm.
But there's a lot more that goes with that in syndications and things like that you're probably doing on those larger ones.
Right. So that's kind of the threshold for you guys is the 20 and under.
20
makes sense. It's an easier underwriting process and everything.
Yeah.
And what are some other products that you guys have that you've seen some success with here?
We do a lot of portfolio. I would say that and honestly Bridge are probably, I think, our two strongest products.
Mm-hmm.
Like DSCR, I guess, goes in the portfolio, but 2+ properties is what you need for a portfolio, and the rates are really good. And it just allows those borrowers to cash flow really well and only have one payment.
Yeah.
So they're not chasing 10 different payments every month. It just gets bundled into one.
Yep.
Rates a lot lower. And it just makes it an easier transaction. It's easier on the back end for them, right? I tell people, like, your accountant will love you.
Yeah.
Do 10 portfolios and your accountant will love you as opposed to 100 single families.
Sure. When do you find that it makes sense for someone to start getting into that?
It depends on the market. It depends on the market and how well they cash flow.
Mm-hmm.
If, like, you have a lot of properties, for instance, I'm going to use Columbus. Like, if you have a lot of properties and you're hitting a 1.0, it's going to be really, really hard to put them in a portfolio.
Yeah.
Because we need at least a 1.2 in it. But where they do really well is, like, high cash flowing markets.
Mm-hmm.
So, like, Dayton, Cincinnati, doing a lot even with, the original, I guess, OGs, right, of Columbus, that are doing, bought 30, 40, 50 properties in 2011, 2012. We're doing a lot of those.
Yeah.
Because they bought them at such low market value that they're still taking 65% on those and cashing out. And
and are happy to do it.
Yeah, and they're getting a 5.75 rate if they take it at a 60%, maybe even lower.
Yeah.
So those, like, that's where they do really well here in Columbus.
Makes sense if you've owned the properties for a while.
Right. Yeah. It's getting harder, as I'm sure you know, with taxes and the rents not really catching up to the values here yet.
Yep.
So that's kind of where you get bottlenecked in Columbus.
Yeah. What advice would you give to someone who maybe went into a portfolio loan a few years ago and then all of a sudden they want to slice off a piece of that portfolio to sell?
Yeah.
Is that something that is really not in the cards, or do you see that? How do you guys handle that?
Yeah, so typically I try to ask them up front, how long do you plan on keeping these? Because it is kind of like you're in it.
Yeah.
There is 120% release price. We can sometimes negotiate that. Not always, but, like, sometimes negotiate that. So it's like making sure that you have those properties bundled to where you can get out if you want to get out. And if you don't know, then I say just do them singly. Just do them.
You got to kind of commit here.
You got to commit. Yeah. So, like, are you like trying to play in the small pond, I guess, or do you want to go in the big pond? The guys that you see do a lot in the big pond are typically like those institutional investors are doing portfolios. And to be honest with you, they bought them so cheap that they basically live off the refi for every 5 years. They just consistently repeat, right? So it's knowing what you're going to keep going into it and committing to that.
Yeah.
If you don't know, then it's better to do a one-off.
Probably not the move.
Right.
Even if you're trying to get your accountant to fall in love with you.
Right. Yeah. It's you're going to be not happy when you go to get that release price.
I've seen people trying to sell properties that they own in a portfolio loan, and it's a nightmare, and it often will just kill the deal because they can't get it done extracting a property from a portfolio.
It goes back to, though, like sometimes the highest leverage isn't the best leverage. So if you take it at 65, you're probably okay to go sell it.
Yeah.
At a 120, right? But if you took it at a 75, it's gonna be really hard to break that property off, to your point. So it depends on the LTV too, right? And how much can you pull out? What do you want to keep in there? All of that matters.
Yeah.
So,
well, I guess the lesson here is if you want to sell a property, don't put it in a portfolio.
Yeah, don't put it in a portfolio if you want to sell it.
Yeah. So let's talk about Columbus in general. And I know you mentioned Dayton and other markets as well, but you do a lot of business here in Columbus. What are some trends that you're seeing here locally? Because you got your finger on the pulse. You're working with a lot of investors. You're meeting with a lot of investors. Are you seeing anything coming up or fading out that you've kind of highlighted?
Yeah, I think the people who do really well have a plan in place. They execute, and it's almost like a rinse and repeat, right? I'm going to use like Travis Copeland, for instance. Like, as the market slowed down, he pivoted and decided, like, hey, I actually need to start getting an interior designer to do all this. It's no longer just like white shaker cabinets and same subtile backsplash, right? It's getting unique with those to get them to sell.
Yeah.
That's what's winning in the market.
Reducing that time on market by offering a very unique individual product.
It's taking a little more time, but on the back end, it's less of a headache.
Yeah. Because that property sitting on the market, that's just money on the shelf.
Right. Yeah. And a lot of people tell you, like, they used to buy the same products and, like, they'd put it in a warehouse and, like, as you use it, you pull it.
Yep.
Right. I think you're seeing less of that and more like, how can we make this property stand out? Yeah. And that's what's selling.
Yeah. That's a very interesting point. So when you're talking about flippers, you're saying more effort, energy, money into the design is becoming, due to the fact that our market has shifted, more and more important.
More and more important, 100%.
What about people who are looking to buy and hold? Have you seen any trends there?
It's just buying right? Don't force something just because you want a rental. Yeah. That's when you see it go bad.
That's when you see the 1.0
DSCR. Or, just like they've told themselves that, like, their goal is to get a rental or two. But, like, sometimes it's just not the right time. Like, what's the bank statements and things like that look like? So, like, if you don't have the liquidity to do it, like, you probably need at least, call it $25,000 as backup, even on one.
In reserves.
Because you just don't know. Yeah. And a lot of people will try to force it with a lot less liquidity, and that's where you get in trouble. Yeah. And that tends to be where you see somebody get hung up. It's trying to force it. Just let it play out, and it'll work out, right? Yeah. But it's buying it right and knowing the rents. I tell people, like, if you don't know, fix it up like you're gonna flip it, and then your first exit strategy, rent it. Yeah. If you can't rent it, then you already have a second exit strategy, right?
The more exit strategies you have,
it's always the better. And it kind of comes back to you too. Maybe they over improved it so much that they should reach out to you. You might not get it in a long term, but can you get it in a midterm, right? Right. So it's knowing the multiple avenues that you can go to get out of that deal. Yeah.
It's so important to be able to get out on the back end, whether that is through a cash out 100%. When you rent it, or just selling it on the market, or if, like you mentioned, if an alternative strategy like a midterm or a short-term rental is on the table, depending on the property and the location, that's when, if you've planned for it on the front end, you're going to probably be okay on the back end. You can weather a little bit more of a storm than you say, hey, this is the only way it's going to work, and I have to do this. And because things go wrong.
Things go wrong.
They always go wrong.
Things come up in rehabs, things like that, right? So you got to plan for it. Yeah. just don't have your mind set that like this is the only thing I'm going to do.
This is the only way. It's easy, especially I think for newer investors, to be very optimistic and find themselves in a bind when things didn't go perfectly, and then you're not starting from level ground. You're starting in the basement, and you got to dig yourself out.
Right. Yeah, don't take the highest comp in the neighborhood.
Mm-hmm.
Take like the middle.
Right.
Like maybe even a little on the low end. Right.
Mm-hmm.
It's you'll put yourself in a lot better spot.
Yeah. And you got to protect yourself. Be as conservative as you can.
Yeah.
Yeah. And you made another point that I like to highlight is that the money gets made on the front end.
Yeah.
You make your money when you purchase.
Yeah.
And if the numbers aren't working on the front end, you can't just rub two sticks together and make them work on the back end.
Right. A lot of people think I'm going to win on appreciation.
Mm-hmm.
That's a betting game.
Yeah. That's speculation.
Right. I hope you do.
Yeah.
But I don't know.
And you got to be able to back that up too. Like if you're just planning on appreciation to make you money, I mean, on one end, I think that true wealth building can come through
100%,
appreciation.
100%.
But you got to be able to float it while it appreciates.
Exactly. You have to have the capital to be able to do that.
Mm-hmm.
And it takes a lot of capital.
Yeah.
People don't realize how much capital it takes to have a rental portfolio.
Totally. It is.
That's the
extensive.
one misconception, I think, is people think you can just have $10,000.
Right. It pays for itself.
Yeah.
The tenants pay the rent.
Yeah.
I pay the mortgage with the rent. But as you mentioned, what happens when the sewer line needs replaced?
Yeah.
What happens when the tenants don't take great care of it and they move out, and then you've got vacancy and you've got a $10,000-$15,000 turn?
Yeah.
Cash flow can go away very quickly.
Very quickly. Yeah. You can go negative very quick in a year.
Definitely. All right, quick pause in the conversation. I want to highlight something that fits right into this real estate world that we're always talking about. Steyer Hospitality Co. brings together a full-service furnished rental management company and a real estate brokerage under one roof, so owners, investors, and agents get reliable support from people who know the industry. Everything we do is built on real systems, trained staff, and the same level of oversight that I expect in my brokerage office. That gives owners a consistent process, steady communication, and a guest experience that feels intentional instead of reactive. If you own a property and feel like it could be performing better as a shorter midterm rental, or you're spending too much time handling guests and unit turnovers, that is exactly where we can step in. We manage the entire operation so the property supports your goals rather than adding more stress to your week. And for the agents listening, we are a resource that you can plug directly into your business. If you have clients trying to keep their low interest rate on their current home while moving up, we can model the numbers and outline the strategy and run the property if they choose to convert it into a furnished rental. And if you have clients who need temporary housing during a transition, we can help place them quickly and keep the process smooth for everyone involved. If you want to see what your property could do in the short or midterm space, or you want a management partner you can rely on, head to SteyerHospitalityCo.com, or you can reach out to me directly through the site and we can talk through your goals, run projections, and build a clear plan. Now let's get back to the conversation. Well, we talked a little bit about some mistakes that you've seen investors make and how, that can cause issues and not having enough capital. Is there anything else that maybe a story you've seen, and obviously we don't need to name names, but someone who maybe got their out ahead of their skis or made some mistakes that maybe someone else could learn from?
Yeah. Know your contractor.
Okay.
Ask for referrals.
Mm-hmm.
And you don't have to start with the heavy rehab. Get something light, and you might only make $5,000, right? 10, but you got the reps in.
Yeah,
I think that's what's important. Is the
at
repetition.
Bat.
Yeah.
You
just hit a single, right?
Mm-hmm.
And build on that.
Mm-hmm.
Don't try to go for the home run, the first deal.
Yeah,
and is
that something you see a lot, or have you seen that?
I've definitely seen it. Not seen it as much anymore. It's definitely getting a little harder for first-time investors and things like that.
Yeah.
But I've definitely seen it. It's always, the big, beautiful brick buildings and like King Lincoln and things like that, where everybody wants to buy it and then they might house hack or whatever. But it's getting in under those walls, and then they're like,
oh, we got a mess on our hands.
yeah. My rehab budget went from 100 to 200.
Yeah.
And they don't have
The
the
backing.
liquidity to be able to handle it.
Yeah.
And then, or they give a big deposit to a contractor on one of those, and they take off with it. So it's really knowing your team that makes it successful.
Yeah. Have you ever seen someone on maybe their first or second deal dig themselves in that hole and then be able to get back out of it? Or do you more often see a down and out situation?
No, you definitely see them dig it out. I mean, I've seen seasoned investors lose money on deals recently. So it happens, right? It's knowing that you can come back and you can do it again. Yeah. I think it's almost a mindset thing. Can I do it again? Yeah.
Will I do it again?
Right.
Am I willing to go through that again?
And maybe like on your next one, again, it's like going back to the basics. Getting somebody to do it with you. Like, it's never bad to go back to the basics, right? Yeah. What I miss on the last one that I can learn on this one from somebody else. Yeah. And I think that's part of it. Maybe too, like, get a partner. Hedge the risk a little, right? Like, you both want to get into it, but you're not sure. Like, hedge the risk a little. It's a lot easier to split capital with two people than it is one. Yeah. So that's something else too. Sometimes partnerships aren't always bad, right? Right. So, I mean, yeah, you definitely see them bounce back for sure.
I know that in this industry, the experience is probably the most important thing. Yeah. And I've been in this industry long enough to have seen a lot, but I also know that I have not seen it all, and I never will see it all.
Yeah, exactly.
And just having that knowledge and the mindset that I'm willing to learn, I'm willing to improve, and and being able to lean on others as well. Something that I always like to bring up on the podcast is mentorship. Yeah. And I think that you mentioned partnership, that can be great. I think that partnering with someone who's willing to mentor is very advantageous when you're getting started in this. Do you see a lot of people take that path?
Yeah. The most successful people I know have mentors. Everybody that I know that's very successful has a mentor of some sort. So yeah, I think it's key to being successful. Yeah. As you continue to pay for those, and you level up, yes, the mentors get more expensive and things like that. Your return on that is probably infinite. So yeah, I think mentors are extremely important. It's finding the right one. It goes back to contractors. There's really good mentors out there, and there's some that, like, I hate to say it, but like they look really good on social media but aren't. It's finding those ones that are really good. Yeah. To help you.
Yeah. And it can be energizing.
Right.
If you find the right mentor.
Yeah. Yeah, I think it's definitely key, but it's also making sure that you know that they practice what they preach. Yeah. And if you don't know, like, reach out to other people in the market. Guarantee you, like, if you reach out to 5 people and ask them, and you hear 5 good things, you're probably okay. Yeah. So it's like, it's the same thing I said earlier about contractors. Like, ask for referrals of people that you know have done really well.
Speaking to mentorship, do you mentor, or have you had a mentorship experience? What does that bit look like for you in your time in real estate?
Yeah, so I do have a mentor, Todd Duncan, very large, probably one of the more successful people in the mortgage industry. We just went to a high trust sales meeting back in, I think it was November, with him in Dallas. I actually just got back from a trip in Arizona for all, like, the top salespeople, and he was there as well. So I do. We have quarterly calls. Yeah. It's always good to learn what other people are doing.
Yeah.
And he's in the conventional space. So not
really?
everything correlates, right? But like he has things that I can still take away.
Mm-hmm.
And he's built a huge business. So I think that's key.
Yeah.
I think that's key.
And I think that, a big piece of this business is relationships.
100%.
And that extends past working with investors or owner occupants or whomever. I mean, relationships are what will make or break, in my opinion, your success in this business. There are people that just are strictly transactional. That's not for me.
Yeah.
I'm not that way. I don't like doing business like that.
Yep. No, I totally agree. We're our team, I say we are going to do really well this year.
Mm-hmm.
Goals to hopefully hit 200 million in origination. And I think we're on track for that. But to your point, it's the relationships that we've built.
Mm-hmm.
And it's everybody working together. So like a lot of people ask, how do you do it?
Yeah.
And it's not me. It's my team,
mm-hmm.
right? They're what makes it easy. And I think that's the key is like you can't do everything.
Yeah.
So the way that you really elevate yourself is like relying on your team.
Mm-hmm. That's such an important part.
Such an important part, yeah.
And that's something that took me a long time to learn.
Yeah.
I think because I have always been the type like I'll do it. I want to pull myself up by the bootstraps and figure it out, and like I don't want to ask questions on it. But eventually, you cannot do that. Right. You cannot be successul by just figuring it out and doing it all yourself.
Yeah, you have to delegate and you have to trust them.
Mm-hmm. Mm-hmm.
Once you do that, I think the opportunities are endless.
Yeah,
that's really how I think you put yourself on the next level,
mm-hmm.
even in the investment space, right? Like once you start flipping, you're eventually gonna have so many projects that like you're gonna have to rely on a project manager
mm-hmm.
and like your contractors to like just do the right thing and continue to grow.
If you truly want to scale any kind of business,
Yeah.
you can't do it by yourself.
Yep.
Yeah. Well, what does the future look like for both you and your team, as well as what do you see for local investors here in Columbus?
Yeah, I think for our team, it's continued to grow. We're very close to taking the number one spot in Ohio for total origination, things like that. I think that's goal number one for all of us.
Mm-hmm.
Goal number two is going deeper in the markets.
What does that look like?
Goes back to relationships.
Yeah.
So it's building those relationships with the investors to know, like, hey, we're more than just your lender.
Mm-hmm.
Like, use us as like a consultant.
Mm-hmm.
And like getting them to realize, like, hey, we want to see you be successful.
Yeah.
I love this city as much as you love it. So like, let's do something special together.
Mm-hmm.
I think is kind of like what we're really trying to do. Renovo is very big on that too. So like, we want to be boots on the ground on the market, understand the market, but also like watch people be successful,
mm-hmm.
right? I think that's the motivation for our team too, is like watching that person that only had 3, then year 2 he does 15,
mm-hmm.
And year 3 he's doing 30, 40.
Mm-hmm.
That's what we want to see.
Yeah.
That's how we know we've done a good job.
And as someone who built my business through working with investors, that's what I loved about working with investors as well, is like everybody that I'm working with wants to grow.
Yeah.
I don't know any investor that says, I want to own one door.
Yeah.
I want to own one door and then I'm happy. I'm done investing in real estate.
Yeah.
Let's all grow together here.
Yeah, I think it's just seeing them succeed, right? Like that's the best thing. Like
mm-hmm.
whether it's, they bought whatever car or they moved into whatever house, like, that like you're helping them make an impact,
mm-hmm.
I think is what I really like about this space.
Yeah.
It touches a lot of different people, which is very unique.
Yeah.
You think about all the touch points that you have in these transactions, right? It's
Yeah.
not just the investor, it's the contractors, it's
Sure.
it's the end buyer. It's all those touch points that really makes it special.
It takes a full team of people
Yeah.
to make this all spin around.
Yeah, and I think that's one special thing about Columbus that's more unique than any other market.
Yeah.
I go to a lot of meetups, different cities, things like that. Columbus is by far the most unique. It's the only place where you'll go and there's 100 plus people in a room for a meetup.
Yeah.
Most places there's 20,
Really?
25.
Mm-hmm.
There's something special about Columbus and like the network that it has here, which I think is really cool to see.
That is, yeah. I, as someone who's a part of it, that's really interesting to hear because for me, that's the norm.
Yeah.
But it does feel special. It does feel
I think
great.
The biggest thing is like it's working together.
Yeah.
Even with other lenders, like I can't do every deal. And they can't do every deal either, right?
Mm-hmm.
So it's like, hey, if I can't do this, who can I pass it to?
The abundance mindset.
Exactly.
It's so important.
It's so important. I think it's the most important part
I
of
agree.
this business.
I agree. You cannot do every deal, and that's really the truth of it. And I think that a lot of people, when they get into this business, it takes so long for them to realize, like, hey, you're not going to do every deal.
Yeah.
You can't. It's impossible.
Yeah.
There is so much transaction occurring in this market.
Yeah.
You just need your piece of the pie.
Yeah.
And then that allows everybody else to have theirs as well.
Yeah.
And succeed alongside each other.
Yep, exactly. And I think that's the special part about Columbus.
I love it. Well, this has been great. This has been really informative. I really appreciate sitting down with you. I want to ask you one more question, but before we do that, where can somebody find you if they want to work with you?
Yeah, so LinkedIn, Facebook, call, text. You can even go to our website. Really, just reach out. Don't be scared. We can even put my number up here if you want. But yeah, just reach out.
And if somebody was looking to get into investing in real estate, what's one piece of advice you would give them?
Walk, don't run. Walk, don't run. So ease into it.
Mm-hmm.
Like I said, you don't have to do the home run deal, your first one.
Just get on base.
Just get on base.
Love it.
And be prepared. A lot of people, watch other podcasts or read other things. Like, I think there's more out there, and knowing your market, I think, is going to be more beneficial than anything you can watch or read. It's a hands-on experience.
Totally.
So,
well, thank you so much for being on here.
Yeah,
this
thanks for having me.
Appreciate it.
No, I appreciate it.
That wraps up another episode of Columbus Brick by Brick, where we uncover the people, projects, and ideas shaping the future of our city. A huge thank you to our guests for sharing their insights and contributing to the ongoing story of Columbus. If you enjoyed today's conversation, please be sure to subscribe, leave a comment, and share this episode with someone who'd love learning more about our community. You can follow us on Instagram, Facebook, and YouTube at Columbus Brick by Brick, and visit us anytime at columbusbrickbybrick.com for more episodes and updates. This is Columbus Brick by Brick, where every brick has a story, and we're here to tell it. See you next time.